It is June 15, 2017. Account value is 96K and a little something. I'm still long LabU, the leveraged ETF on biotech on the ETF XBI. And I wanted to do an early cast because we have another, 58 minutes left in trading. Because there is this rumor out there that Trump is preparing for an executive order on drug prices. Shocker. But the market is reacting to it. To me, it's noise. And that is why I do not want to chicken out on this random downward move. I actually appreciate if this executive order finally came out, because then we can look past it and biotech can finally break out. So that's why I wanted to do the screencast early to get that out. But tomorrow we have options expiration. So there could be a lot of random moves. And I don't think we need to overreact to those. Biotech wants to break out. The price action is pretty clear. Today looks random to me. It is variance. It's based on this headline. And the goal is to use variance to our advantage. So when random moves happen in favor of us, then we take that spike to sell some. And when random moves happen against us, we don't freak out on it. We use it as a buying opportunity. So if I did not own LabU already, I would use this weakness to buy into it, because I don't think this executive order changes anything. So that is what I wanted to get out early. Let me cover real quick what happened in the market, like in general. Here at the beginning of the day, we challenged this low here in the NASDAQ, and it was picture perfect reversal. We tested it. We got like 2-3 points below it. Then we saw buyers coming in. So as long as this holds, the NASDAQ is okay. But what was worrisome to me is that after this new low, that we could not get into this free real estate here. So all clear is only if we break above, let's say 5,800 or so. Then I think we are back to all-time highs. But the longer we stay between 5,650 and 5,800, the better the odds that we break to the downside, I believe. So we are not out of the woods yet. Let's go over a couple of names. Let's, of course, start with Tesla. Tesla is still acting like a rock star. Right? I mean, it came down, $15 from after this magnificent run. Found support at 370. The longer 370 holds, the more likely is we are going to see the next leg higher towards 400. And let's check out Square. I am a little regretful that I did not take advantage of that dip here when it happened, because Square is one of my favorite names, because it has a high short interest, pretty much as Tesla does. A lot of people do not buy into the idea, and I mean, they have significant growth. I just love the business model, so that would have been a good time to pick some up. And but woulda, coulda, shoulda, right? Part of the game. Let's talk about gold real quick. Here on the left I have GLD, and this time GDX on the right, because I want to use GDX to determine my entry into JNUC, the leverage ETF on junior gold miners, because I believe there is probably more downside in gold. We saw a less dovish rate hike than the market was prepared for. So, and the dollar is now finally soaring. So I wouldn't be surprised if we see more weakness in gold. The question is, how do miners react to it? And between 22.5 and maybe 21.5 or 21, I think miners are in no man's land. So, but if GDX gets hit one more day and we test 21.5 or even better, 21, that is when I would pick up JNUC on the dip, because GDXJ acts a lot better than GDX. So if I buy miners, I buy the miners that are acting better, but I will determine it based on the price action in GDX, if that makes any sense. Okay, I wrap it up here so that I can send out the email blast before the bell, so everybody is up to date why I am keeping LabVIEW overnight. I'll be back tomorrow with another recap.